Hey everyone, Snap reported quarterly financial results that sent the stock price down 26% as of this recording. Snap share price is now $9.48. I'll review the financial results that sent stock price down for Snap, and I'll also update my buy recommendation for Snap stock. Coming into this quarter, I had rated Snap as one of my top stocks to buy here in 2024, and I'm going to update that recommendation and let you know if I still think Snap is a top stock to buy, or if these quarterly financial results were so bad that I'm now downgrading the stock. I'll let you know the conclusion in this video, so let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So starting with revenue, Snap reported $1.2 billion in revenue, which was an increase of 16% compared to the same quarter the prior year. Now, in and of itself, it's a reasonable growth rate. It's decelerating revenue growth for Snap, but the concerning factor about this revenue growth rate was it was among the slowest of its peers, right? If you look at Meta platforms, Pinterest, Alphabet, Roku, and maybe some other companies that are dependent on advertising, they grew faster than Snap overall. And Snap is a smaller company than many of those that I mentioned, which suggests that it should be growing faster than some of those other companies. So investors were a little disappointed at the rate of increase from Snap. Still, overall, a 16% growth rate means that Snap did gain market share in the $1 trillion advertising industry. The overall industry did not grow by 16% year over year in the quarter where Snap reported. So Snap did gain market share. So maybe it wasn't as much as investors were hoping. Still, it was an increase in market share for Snap. Operating cash flow also improved to negative 21 million compared to negative 82 million in the prior year. And as I've mentioned many times, I don't mind investing in companies that have negative cash flow or negative profitability, so long as they demonstrate to me that they're improving and I can see a pathway where they get positive and they start to increase their cash flow and meaningfully become positive and self-sustaining in the longer run. I do see that with Snap. I see them improving. I see a meaningful runway for improvement, and I see a pathway like I see with other companies with similar business models like Meta platforms, where this can be an incredibly lucrative business if they can reach a large enough scale. Now, I'm not saying that Snap will ever become as successful as Meta platforms, but if they can even become a fraction of the success of Meta platforms, Snap will be a successful investment for shareholders longer term. Operating cash flow over the trailing 12 months was positive 244 million, and free cash flow came in at 15 million. Yet operating losses specifically, those improved as well, decreasing to 254 million, better than the 404 million negative it reported in the same quarter in 2023. Similar story for the 6 months that ended June 30th for Snap. Operating losses improved to 587 million, down from 769 million. So Snap making progress in all the right places, improving its losses and making progress towards profitability. Snap reported daily active users of 432 million in the second quarter of 24. That was an increase of 36 million year over year, or 9%. Now, if I compare this to, let's say, Meta platforms, it increased its daily active users by 7% year over year, but Meta platforms is almost 8 times the size of Snap in terms of daily active users. So investors are hoping that Snap can grow faster than Meta platforms can grow because Meta is already at such a large scale. Looking at monthly active users, Snap now hit a new milestone of 850 million monthly active users. And this benefit, the network's effect benefit from adding daily active and monthly active users, increases exponentially. The more users you have on the platform, the more it attracts new users to the platform because there's so many already there. And then it increases engagement because there's more people on the platform, and so people visit the platform more often because they know their friends and family are visiting the platform, and that positive virtuous cycle increases exponentially. So Snap is making great progress in this regard as well. Now, one area for disappointment is Snap's inability to grow users in North America. You'll notice that it's been relatively flat here in North American daily active users, where it reached a peak of 101 million in the second quarter of 2023, and it's been here for 4 consecutive quarters. In fact, it decreased to 100 million in the latest update. North American users generate the greatest average revenue per user because they have greater purchasing power. Most of Snap's growth is coming from the rest of the world segment, where the company added 16% of its new users in the most recent quarter. 9 million additions came from the rest of the world, and then 1 million from Europe. So of their 10 million daily active users they added from the previous quarter, 422 million to 432 million, 90% of it came from the rest of the world. And here's why that's not great news. You can look at the average revenue per user, and you can see in North America, the average revenue per user is $7.67, whereas in Europe, it's only $2.36, and in the rest of the world, it's $1.02. So 90% of Snap's user growth in the latest quarter came from its lowest value segment, its lowest value region. And so that was, if you're looking to point to a disappointment from the quarterly release, this is one big disappointment. The company continues to make progress with their direct response products, growing in small and medium-sized businesses that now more than doubled year over year. So they're becoming more attractive for small and medium-sized businesses to advertise on. And this goes in connection with the increase in daily active and monthly active users. The more people you have on the platform, the more businesses it attracts for investment, and the larger scale, the more attractive it becomes for even smaller and smaller businesses. So this opens up greater opportunities for Snap. Another disappointment came in terms of its forecast. Snap is forecasting daily active users of 441 million for the third quarter. Now, let me remind you how many they had in the current quarter. They had 432 million daily active users as of the end of the second quarter. So they are forecasting an increase of 9 million new users, which would be down from the 10 million they added in the second quarter. Furthermore, the company is forecasting revenue growth of 14% in the third quarter, which would be down from their second quarter revenue growth. Again, another deceleration. And then finally, they're forecasting adjusted EBITDA of 85 million in the third quarter. And analysts on Wall Street were hoping for a bigger profit increase for Snap from the quarter. So, two big reasons why the stock price is down. Number one, the segmentation of the monthly active user growth and being concentrated so heavily in the rest of the world segment, which generates the smallest average revenue per user. And secondly, the disappointing forecast, which follows that, right? If you're attracting daily active users that generate less average revenue per user, then your revenue overall is going to be disappointing because the people on your platform are not generating that much revenue. And the reason they're not generating that much revenue is because they have less purchasing power. And if you're a business, you're not going to spend as much money to attract a customer who's not going to spend that much with your company. So you want to attract customers that have greater purchasing power, and you're willing to pay more for that. And North America is the region that has the greatest purchasing power. And so businesses are most interested in attracting users from that region. So Snap now trading at a share price of $9.48 following the disappointing quarter. The forward price to earnings ratio is now 23, which is the lowest you've been able to buy Snap stock according to this metric, going back all the way to early 2022 and before. Snap stock is trading at its cheapest it's ever been according to this metric. So I highlighted that I've had Snap rated as a top 25 stock and a top 10 growth stock to buy. I last updated that recommendation on July 1st, and after reviewing the financial results, I'm reiterating this top stock recommendation for Snap. I still like this company longer term. I think they're making progress in all the right areas. I agree that this latest quarter was not great, but the valuation is so cheap and their prospects longer term haven't really changed. It's just a matter of the fluctuating quarter by quarter increases and decreases. It's more of a longer term story. The advertising market globally is roughly $1 trillion. Snap is a small fraction of that, and they're increasing and they're gaining market share. So longer term, they remain on a positive trajectory. And we have an example of another company which has done this similar pathway, which generates very lucrative profit margins in meta platforms. And Snap is heading on that path, even if they don't achieve all that meta platforms has achieved. Like I mentioned, even a fraction of that would generate a great return for shareholders. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.